Hi, everyone. Welcome to TimingResearch.com Crowd Forecast News, episode number 220 for April 15th, 2019. If you have not had a chance to take a look at today's report yet that I published last night, you can go to TimingResearch.com. It's report number 290, and you should be seeing that on your screen while I'm talking. And you can get a copy at TimingResearch.com/reports in either web or PDF version. We're broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also get the audio-only podcast version of all episodes on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. My name is David Kosmitter. I'm the creator of TimingResearch.com, and I have Dave Landry back to moderate today. So I'm going to go ahead and turn it over to Dave.
Thank you, David Kosmitter, and thanks to Timing Research and Crowd Forecast News for having me back once again. AJ, let's go to you first. For those of us who don't know you, AJ's a veteran of the show, but for those of us who don't know you, AJ Brown of TradingTrainer.com. Tell us a little bit about yourself, TradingTrainer.com, and anything else you want us to know.
It's good to be back, Dave. Yeah, I'm AJ Brown with Trading Trainer. We've been trading since 1997 and sharing our education since 2002 in both our nonprofit for the inner city kids and our profit, which is TradingTrainer.com. And really focusing on equities and options this whole time. And right now, this year, we've been doing a lot of premium selling, and that's our focus. We've got some directional stuff happening just these past couple of weeks, but we've got in our back pocket all that premium selling. You can never go wrong with selling theta decay, especially when there's choppy markets.
Okay. Bennett, let's go to you. For those of us who don't know you, Bennett McDowell, another veteran of the show, TradersCoach.com. Tell us a little bit about yourself. Easy for me to say. And TradersCoach.com. Good to have you back, Bennett. Thank you.
Okay. Hi. How are you? Good to be back. All right. Well, I run TradersCoach.com. We started that back in the 1990s. And we started pretty much as a very simple website. I was managing money for one of the wirehouses and running a trading fund there. And we used it as a central place to meet with some of our clients. But it was very old-fashioned. It was basically just text only. So we text back and forth. And then we developed and brought our software, our trading approach into software. And so currently now we sell educational material. We also provide our software to our clients, and both on the retail level and the institutional level. And we have a lot of fun trading the markets. We trade futures, stocks, ETFs. We're not big in Forex, but we have a lot of clients that do trade Forex. And we also do bonds and things of that nature. So we do a lot of training. We're pretty much one-on-one with a lot of our clients. We do a lot of coaching as well, consultation type stuff with traders. We have software now being used in over 90 countries worldwide. And we really focus on trend trading from a technical standpoint. We don't try to really get into why a particular market is trending. We just don't want to miss it. That's the kind of philosophy that we have here. So we're not really that smart enough to always know some of the inside reasons why a market is doing what it's doing. But, you know, the truth of the market's in the price. And so we follow the price as best as we can with very strict risk control. And Absolutely. So that's what we do here at TradersCoach.com.
Sounds good. One of the complaints about the show is not enough controversy. So you won't hear me arguing too much with that. In fact, they actually call me, as far as reasonings, I really don't care. They call me the trend following moron because I'll follow the trend.
Well, that's like me. People ask me, well, why is it trending? And I'm like,
who cares?
Because it is.
Right.
You know, I'll tell you after I get stopped out. You know, we'll find out. There'll be some reason that's given to it.
That's right.
Yeah. My name is Dave Landry, DaveLandry.com. Like Bennett, I am a 100% technical trader, meaning that I only use the charts for my analysis. And as I just said, somebody once called me a trend following moron. Initially, I was very offended. And then when I began fighting trends because I thought I was smarter than the market, I realized I was pretty stupid and should just go back to being a trend following moron, like he called me. And that name stuck, and I got the T-shirts and the hats and the buttons and everything else that followed. Over the years, I've been trading for a long time. Started in professionally, I think I started in the mid-90s, worked for a few hedge funds way back then, and then I was part of one of the first educational websites out there, which later became DaveLandry.com when I split off from those guys. Over the years, I've helped thousands of traders, and I actually have carpal tunnel in both hands to prove it. And because of that and other reasons, I decided that realized I was inefficient. So I started a learning management system last year, and I also have actionable signals. And if you want to, I believe in, get to know me first. And if you go to, let's see if I can get this shared properly. If you go to DaveLandry.com/CFN for Crowd Forecast News, I'll give you all three of my books, and I'll give you a peek at the learning management system. Let me just pull that window up real quick. Oops. And while I'm doing that, let me just get the next question queued up. But yeah, I believe in keeping things extremely simple. In fact, I noticed a question this week is on indicators, and spoiler alert, I don't use any except for the occasional moving average, and I'll explain that in detail when we get there. Anyway, there's the website. If you want, you could, I'll give you all three of my books so you get to know me, and I'll give you a log on to the learning management system so you can start looking around there. Lots of stuff to keep you busy for a long time while you get to know me. Anyway, AJ, let's go to you first. And the first question is, which direction do you think the S&P index will move from today's open, obviously, to Friday's close? And then rate your confidence in your answer to that question by estimating the probability that you have correctly predicted this week's market's move. And then, as you know, we'll get into the reasoning in the next question. So go ahead, AJ.
All right. So just to keep it pretty simple, we're bounced up against this level of resistance at 2,900 on the S&P 500. And, we hit that high on Friday. We kind of are bouncing around. But just till this upcoming Good Friday, it looks like it's going to be slightly higher. But my confidence is just over half. So I'm going to say 60% that we're going to be higher, kind of inching up a little bit. We'll see what happens after the Easter holiday, but I've got more reasoning that we'll talk about later.
Okay, cool. All right, Bennett, same question.
Yeah, let me share my screen here and give me 1 second. That's always a challenge, right? Okay, there you go. All right, on my screen, I've got the S&P. This happens to be the E-mini, but S&P. 60-minute chart is on the left and the daily chart's on the right. And I got to tell you, Dave, it's been a pretty tough market for me to tell you exactly what's going to happen on Friday. And the reason for it is that it kind of swings back and forth. And whether the swing is going to be done by Friday in the direction I think it's going to be is a little bit like brain surgery at this point. It's pretty tough. But on the chart here in front of you, what I really use a lot is a couple indicators. And one here is, I don't know if you can see it, but it's the one in the middle down below that's a solid green color on the left-hand side. And that's called the PTF indicator. And when that is green, you find the highest basically price in that green area. And we have found that this indicator has about a 75% accuracy rate, which is pretty good, okay, in the markets. Anything basically over 60 is pretty good. So that's pretty decent. So it's looking like, on a 60-minute chart, we're going to make a high at some point, all right, before we, go have a change in trend is basically what it's saying. Now, if you looked at the lower time frames, which I did earlier, they have a red PTF. So the lower time frames are saying we're probably going to go down maybe for a day or so. But we could rebound. And then the green PTF would be correct, okay, on the 60-minute at some point later in the week. Now, the daily chart on the right has a red PTF. And this one here is basically saying that the low that was put in late 2018 is not the final low. All right. So, it's close. If it goes above this upper band on the PTF, then it will turn green, and that'll be one of the 25% times it's wrong. So that could certainly happen, right?
Is that indicator proprietary, Bennett?
What's that?
Is that a proprietary indicator?
Yeah, it is. It is. And you can get that at TradersCoach.com. But the thing is that, you know, when we're wrong, of course, we all protect ourselves with what? Risk control, right? So, you know, it's a tough call, but I'm going to call, I guess, because the 60-minute has the green PTF, I'm going to call for a higher high at the end of the week, but I don't have much confidence in the timing. That's my problem. Okay. So I'll say 60%. All right. At this particular point, because if I'm a day or two off, I'll be wrong.
Okay. Okay. All right, AJ, I think Bennett already answered question number 3, so I'll probably skip over you when we get back to that one. But if you want to chime in with something, feel free. And also, as you guys know, we always circle back at the end. So if you feel like there's something else you want to say, or if I skip you for some reason, I will circle back in the end for any final thoughts. But AJ, question number 3, for your answer, please share what specific reasons you think the S&P is headed higher.
Well, okay. So I gave it a 60% confidence, similar reasoning to what Bennett said. And that's because you can't really at this point tell. You've got a couple of different chart indicators contradicting themselves, right? I don't like to take any actions on leading indicators, but I sure do like to use them to ping me, to start triggering me, to start looking for lagging indicators to confirm what I'm thinking. And as far as I see, we're in a form of range contraction leading into something like range expansion in the future. When that future is, I don't know. But it also looks like we're in an ascending converging channel. So all of that to say, it's kind of a crapshoot what's going to happen this Friday. However, with just the momentum leading into the holiday and into the earnings season, I'm going to stick with my 60% confidence in it going up.
Okay, cool.
But just a little bit.
Gotcha. I've often say that you could only predict the short term when it comes to markets. It's sort of akin to predicting the weather. If you look outside and it's cloudy and thundering, you know it's going to rain soon, but you don't know if it's going to be raining this time next week or next year, and so on and so forth. What I do through money management, I have a hybrid approach to money management where I'll take a swing trade and then I'll take the profits off for the swing trade, half, and then I'll ride the remainder of the position with a loosening stop that I loosen as the position moves more and more in my favor. And again, as I mentioned earlier, you can get my books for free, and the money management is explained in there. But the ultimate goal is to capture a longer-term trend. Now, a lot of people have misconstrued me saying you could only predict the short term with you could always predict the short term, and that's simply not true. So I need some sort of setup for me to say, well, I think it's going to head higher based on the setup, but I would also need a trigger in that setup. In other words, if I had a pullback, let's just say like back here in the S&P 500, a little pullback, well, market's a little oversold due to bounce the direction of the trend. So I'd be a little bit more confident of the market headed higher back then than I would be now. The trend is up. So as a trend follower, I'm going to have to go with up, but my confidence is small. I'll just go like 55%. And the reason is that we're very overbought on both a short-term and a longer-term basis. Let's take a look at a weekly chart. And whenever you have these V-shaped recoveries at high levels, it's always a little dangerous to be buying in right around that old high. Now, a market can do whatever it wants, but usually by the time the market gets all the way back to its old highs, after especially such a great run, I think that's about, let's go back to a daily real quick. I think that's about an 18% run, if it's that much. Oh, no, it's like 20-something% run, okay? So markets often don't do that in an entire year, and we've done that in just a few months here. So I think the market's a little tired, a little overdone. Doesn't mean that it can't keep going higher. And I am in my individual stock positions. I don't have any shorts whatsoever, so I'm just continuing to follow along and let the market tell me what to do. One other thing I want to show you real quick, if we take a look at a 50-week moving average, one of the things I've discovered is that as a general statement, if you have what's I've dubbed Landry light, meaning that the lows are greater than the moving average, as a general statement, you want to be long the market, and if the highs of the market are below the moving average, like they were in this bear market and this bear market, then you want to be short the market. So just a very simple type of indicator. And then I created a simple little system where if you're within 10% of the 50-week high, you want to be long. And if you're further away from the 10% and below that moving average, just on a closing basis, you want to be short. That system is actually inside of the introductory course and the market timing course on the website. So you can get that for free without going into a lot of details there. But the point is that we are above the 50-day moving average. We are above the 50-week moving average. Nothing magical about a moving average or any other indicator, as I'll discuss here in a few minutes when we get to the question of the week. But as a trend follower, I can't argue with the fact that the market's going up. So that's why I'm predicting that we're going to continue to go higher. It doesn't mean that we won't have some corrections along the way. One thing that is kind of scary, and right now it doesn't look like we're going to have to worry about it, but it seems like the man on the street feels like he dodged a bullet at these lows. And I know Bennett says there's still a potential to retest those lows, and I wouldn't completely throw that out because the market can do whatever it wants, obviously, but I think everybody feels like we dodged a bullet back in December. And one guy on the street I met, he said, says, man, I'm so glad I held on. I wish I'd have bought more at the lows. So I think that mentality is still out there. So I think if we don't get past these prior peaks in here and stay there for a while, I wouldn't rush out and buy the market. Just one more thing real quick. I know I'm kind of going long here, but if you take a look at the Russell 2000, the Russell's a little bit more scarier than the S&P 500. It's got that big picture retrace look to it. And I'd feel a heck of a lot better if we got past, let's say, 160 or so in this Russell 2000, because so far it just looks like a thrust down, a pullback, and it's just kind of consolidating in here. And it looks like the next leg could be lower. So that's got me a little nervous about the overall market. But for now, I think the S&P is still headed higher until proven otherwise. All right, long-winded answer. Sorry about that. Okay, AJ, let's go back to you for the question of the week. And the question of the week this week is, what indicator influences your trading the most?
Well, okay, before I go into that, and I do have one that is my all-time favorite, but I also want to throw out just what I call common sense indicator when you're looking at both price and volume charts like we are here. And then also I love point and figure charts that give me an idea of, rather than logging action based on time passing by, logging action based on movement, and logging action based on reversals. But you got to, the common sense I'm talking about is also what you're talking about, which is when you approach that high, you got to think about, I read a study once that people aren't as afraid of death or even public speaking as they are of the fear of missing out, right?
Yeah.
And you look at these ascending channels like we've talked about since the end of December, and you think about all the good feelings people are having, but you also think about all those people who are at that high that we're about to approach, who saw the last trend and were so excited to jump on that ball because they had seen that ascending channel forming for so long and they didn't want to be the last ones out. And then all of a sudden the market drops out, right? And so what have they been doing? You got to just ask yourself, what if those, especially if they're just retail traders off the street, they've been sitting on the edge of their seat saying, what the heck did I do? They've been white knuckling their arm, their armrests. They haven't been allowed back in the bedroom with their spouse because their spouse thinks they lost the farm here. And so they've been waiting for that moment where they can get out at break even, which is going to cause a whole bunch of selling pressure, which is what resistance is made out of. And so the question is there enough buying pressure to overcome all those folks who are going to jump out because they finally get to go and get to, go back to sleeping in their bed at night? So with that said, there's some heavy resistance overhead whenever you hit a 100% retracement like that. And so that's something everybody has to be aware of. Don't get caught up in FOMO, fear of missing out, when you've got that kind of common sense approach. And a lot of people don't even look back far enough on the charts. They can't see past their nose to even see that that's what happened. Now, with that said, you asked me about my favorite indicator. I like just looking at price and volume, and point and figure charts naked is what I call them. But if I were to throw an indicator, if I had to be held to the wall, I love the MACD, the moving average convergence divergence, which has been around since hammer was a hatchet. In fact, just at this last Traders Expo, I got to go and listen to the son of the gentleman who came up with the moving average convergence divergence indicator, and he's gave me a whole different set of like variations that he looks at. And I've been just going to town for the last 6 months at different templates that he threw together on the moving average convergence divergence. But just remember, because I remember at one point, and I think we're going back 15 years, where I sat in on a trade station. You know, they had this software that was out and talking about indicators, and they were talking about how if you throw their software on with an indicator, you can optimize the settings to match, you know, what has been happening over the last years. And my answer to that is, you don't want to be following a different map than everybody else. Sure, you can match this indicator to match like the last 5 years of data, but now you're following a different map and you're using a different compass than everybody else. And when everybody else is going east, you're going to be going north. I don't think so. If you're going to use any sort of indicator, make sure you're using the standard settings, because when it comes to making money, especially if you have smaller portfolios like most of us probably do, you're not a market mover. You're following on the coattails of the big guys. So using your tools in order to read what the big guys, the big market movers are doing is really how you're, you know, jumping on their coattails is really how you're going to master this game.
Gotcha. Well, one thing I want to chime in with too is that the market can be a very bad teacher. So the market has just taught everyone to hold through ugly corrections. And if you're a trend follower and you have to use stops, unfortunately, and we get stopped out sometimes, it happens, pronounced with a silent SH. And if we get stopped out, we get stopped out. But the market has just taught everyone to hold through the next correction. And that'll work until it don't, as I often joke. Bennett, you're up next. And the question is, what indicator influences your trading the most?
Well, I also think AJ did a great job on that. I think, you know, indicators, when you optimize them, the problem with that is, you know, what's your baseline? You're always going to be optimizing. And then when you go to a different market, how do you know what to optimize there all the time that's going to be accurate going forward? And, you know, the past is not always the same as the future in terms of volatility and things like that. So I agree. I always trade the truths of the market. I think it's price and volume for the most part. All right. You can't, it is what it is, and that's it. And I think that's where you need to focus. And that's, you know, what we built basically our applied or ART software. And ART stands for applied reality, underline reality trading, because it focuses on price patterns, volume, and things of that nature, momentum in the markets. And you can't really distort that. So that's where we start for our initial trade entry. So let me just, and in terms of an indicator, you know, we also use quite a few things here. Let me just make sure you can see my chart. It's blinking there. I don't know why. Is that blinking?
It's probably your software trying to separate that from something.
Well, I don't know.
It's a dance party.
Yeah, it's a dance. Let me turn the camera off for a minute. Let's see if that helps it. No, that doesn't help it at all. All right, let's go. Okay, it didn't like the picture. That's the problem. Oh, for goodness sakes. All right. So on this here, what we like to use is a variety of software tools. I like the PTF because of the accuracy rate, okay? But we also like to connect the dots. Now, you notice the pyramids or triangles on the chart here. This is our ART software working. And what it's doing is it's looking at support and resistance levels in the market, and it's looking at the momentum that goes into forming those. And then we move our stops, you know, for example, on a downtrend, we move our stops below the flat or above the flat parts of the triangle. And our entries are one tick below the points or apex. And these are fractals in the market with support and resistance. That's basically what it is. They're also known as like 1, 2, 3 patterns. I don't know if you've heard of those for trend trading, but in any case, that's what we use. But we also like to go in the direction of momentum, and the histogram below that is what's measuring that. So if the histogram is red and we're having red triangles, then we connect the dots and say that's good. Then the next thing we go down and take a look at is the PTF. And as long as the PTF is not green, yellow's okay, yellow's neutral, but as long as it's not green, then we're looking okay to take a trade, okay, in the direction of the pyramid. And so that's kind of one of the things. Then we have the trend line under that. So I guess my favorite indicator, it's kind of a combination, Dave, of both art and connecting the dots on some of the other methods we use to confirm it. It's almost like we use the indicators as check marks. You know, the art system will deliver an entry, and then we look down and see if that entry, all right, has confirmation. And so that's kind of what we do. We do not use the indicators, getting back to AJ's point, we do not use the indicators for our entries and exits.
Correct.
Okay. That's one thing we don't, because they're lagging. All right. For one thing.
Yeah.
So, but we do use them for confirmation. So, you know, it's a toss up, but you know, the PTF is one of the things that is really helpful also when you're getting near a top or a bottom to know if you should scale out or not, that type of thing. And one of the other charts I was going to show you that was blinking was the Dow Jones. And that also gave you another example of how that works as well. So it's a connecting of the dots for us with strict risk control.
Okay. As far as my indicators, the only indicator that I will occasionally use is the moving average. I don't think there's a such thing as a leading indicator. Indicators don't actually indicate. What I often say is indicators illustrate. And if any good trader that I know that uses indicators, it seems that you could take away their indicators and they still could trade.
Correct.
The thing that the moving average does is it might alert you to the fact, and I don't use any other indicators, and there's nothing wrong with using indicators, but I think that they could help illustrate what's going on in the charts. And a lot of times people will say, hey, Dave, is this stock trending? I'm thinking about buying it on a pullback. And it's like, okay, well, plot your moving averages, and you'll see that they rolled over. And I actually do have a pattern that uses indicators called bow ties. And what I'm looking for is all three to come together and then begin to spread out. And again, you can get that off the link that I gave out earlier, davelandry.com/CFN. And we had one back here in 2015 and 2016. And in the Russell 2000, it was nearly an 18% drop from that. So it's nothing to sneeze at. And if you go way back in time, when you have a weekly signal, especially off of an all-time high or a multi-year low, you could see that we had one here, we had a buy here, we had a sell here. So there's nothing magical about that. If you were to zoom in that time period, though, you would notice that the market was beginning to lose some momentum and lose some steam. And putting the indicator in there just helps to illustrate that. But you can see this is a weekly chart. So if you go way back to like 2007 all the way to 2008, we went nearly, what's that, a year or so, or nearly a year, then the market was unchanged. So if you didn't know anything about markets, you know that they're losing momentum. And then you can see this bow tie right here, which works really well in a gradual rollover. These moving averages came together, begin to spread out to the downside, giving the appearance of a bow tie. And then that signal obviously was a really good signal. And then the buy signal was a little slow, a little bit of a lag on a weekly, but on a daily chart, we had some really good signals. The 2002, 2003 was a really good bottom for this indicator, if you want to look at it as an indicator, because it took a while for the market to kind of bottom out. On a V-shaped recovery, it'll take the moving averages a little while to catch up. But then we use price too, first and foremost. So we would already be long based on price when that occurs. So I don't really, if you find something that you like, then use it, but always look at price first and foremost. And then if I had to say one indicator, I would say the net price move. Is the price higher or lower than it was a week ago, 2 weeks ago, 3 weeks ago, and so on and so forth. And I think that could help you really determine a market's trend. A lot of times people say, hey, Dave, I like this pullback. What do you think? And I'll say, well, yeah, it was trending for a while, but it's gone sideways here for 6 weeks. So just by looking at the net, if the price is relatively unchanged, then there's no longer a trend. And then you might just want to sit on your hands and wait. So not a big fan of indicators other than the occasional moving average. But if you can use them and if they help you to determine or give you some sort of confirmation, I think like Bennett was saying, give him a little confirmation in his analysis, then by all means. But for the most part, I'm really anti-indicator. Okay. All right. One of the newer features, I say it's newer features, I think we've been doing it for a few years, is if you have a trading idea for this week or a setup you want to share. I should have mentioned this earlier so you guys can think about it, but do you have something off the top of your head, AJ? You'd like to share with us?
Actually.
And it could be a trading tip or something, whatever you want.
Sure. I'm going to share my screen today, and that's because we have in our premium selling program a workshop that we do every Thursday. And in that workshop, all the people in the program show up, and in the first 5 to 10 minutes, they take picks that we've done through our screener, they vet them, and then they throw them at us, the ones that they like for their personal portfolio. And we'll go through in the first 5 to 10 minutes of the call, maybe 5 to 15 picks, and try to find one that's going to work really well. We think is the lowest hanging fruit, the best of that lot. This past Thursday, one of our program participants wound up submitting NCR for us to sell premium. Now, when we're selling premium, we're actually looking for sideways channeling and choppy. We like to, in the channel, we like to sell our premium at the highs of the option price, and we like to get into the position, whether it's with a back month leap or whether it's with the underlying symbol itself. We like to do that, at the opposite position. So, for instance, this NCR really caught my personal attention, and I'm actually researching the underlying symbol, seeing if it has a propensity to continue to just go sideways. Because selling premium is kind of like when you own a property and you rent it out, but we're not dealing with real people. We're renting out our underlying symbol. In this case, we're actually looking for NCR to form its top, and you can see I'm using exponential moving averages, the 3 and the 5 for a crossing, and I'll actually look for a threshold crossing as well on the price. And once it's formed its top and I feel comfortable about that top, we're actually either going to short the underlying symbol to start a covered put, or there's enough liquidity in this option chain to buy a deep in the money, far out in time long put, so that we can then wait for the next bottom. And that's when we'd sell our premium and even possibly collar this with a protective call. So we like that combination, especially 2019. Again, we see a lot of confidence in the overall market as well as the underlying symbols. Going to give us a nice sideways choppy ride for the year. Selling premium is where we're at. And this one actually caught my eye, and I'm looking for entering it in my personal portfolio. I wanted to share it with everybody else.
Okay, cool. All right, Bennett, any trade ideas for this week?
Oh, yeah. What we have started doing, Dave, which is kind of fun, we've been very involved in social media lately. And so what we do is we do a stock pick each and every week and post that on Twitter and Facebook and all that kind of stuff. And I'm actually going to put a link up here if anybody wants to join our Facebook page and like it. Then you'll get these updates on Sunday before the market actually opens. But here's one I'm going to show you that we did this week. And it's actually an interesting one because it's not a buy and hold. This is a short-term trade. And this is a 60-minute chart. So you're going to be holding this trade anywhere from around 2 weeks, maybe a few days to 2 weeks, basically, because this is not a daily chart and it's not a weekly chart. This is a 60-minute long-term intraday chart. So the trades usually span for that time period. And what we're looking at, this is the Kraft Heinz company. And this is a counter trend trade. So we think we got a pyramid trading point. I'm going to circle that here. Hopefully you can see my cursor there. So I'm circling that there, and it's a pyramid trading point entry here. And we have a green PTF and a fib retracement zone that we use for targets up around $38 to $42. And the stock right now is about $33.12. So not a bad gain for a couple weeks at the most. And so this is one that we found using the scanners. Now on the right-hand side, in the black area, you'll see a bunch of rows and columns. These are scanners that we have at TradersCoach.com where we find things like this. And we're looking for, we have a scanner called the Trade Confirmer that scans the indicators at the bottom, looking for setups, as well as the ART system and Elliott wave. So again, we connect the dots and look for things that we like to look at, and we have a pretty structured way of doing that. And this one basically came up for this week. Now you want to put your stop under this pyramid here, okay, which is this right here. And so you're getting it at a really good point here. So your trade size can be quite high because your actual risk between your entry and your exit is close. So when that occurs, you can get a pretty high trade size. Now, when we talk about risk control, it's really important for us to implement that on each and every trade. And you also want to basically solve for the trade size or the trade size, whether it's short or long. In this case, it's long. But your risk should be your percent risk you take on your trade is a culmination of your win ratio and your payoff ratio on your closed trades. So that can be calculated so you're not just guessing at what percent you want to risk on each and every trade. Correct. And so we take that into account as well. So again, we like setups like this because the risk to reward is so good. And cool. So that's why we're sharing that one.
Okay, thanks. Okay, as far as a trade of the week, let me show you the screen, and then I'll show you what I'm thinking about. Now, one thing that I'm seeing with this one, if I can get it shared, there we go. This is NGM. Now, it is a little bit on the thin side, so you've got to be really careful. And what I'm doing here is a buy at B pattern. Now, let me just show you like LIFT. You can see LIFT has completely died, but what I do is I wait until at least the 5th trading day on the close before I look to get long. And a very simple pattern such as this will keep you out of a lot of trouble, such as LIFT. I repurposed an article that I wrote about Snapchat when it was coming public and then absolutely died. And then Blue Apron, same article, same thing. You got to watch the first week of trading and just stay out of their way. Who was it? Will Rogers once said, if stocks don't go up, don't buy them. And there is some truth to that in IPOs. So let me just show you a recent one that we took. Not that they always work, but right here, the close of day 5 was a new closing high. There's a few little caveats, but this was one. And if we go to the Facebook group, let me just show you here. The Facebook group that I have is based on, or I should say, you need to be a member of DaveLandry.com in order to participate. So if we go to this Facebook group, just give me one second to get over there. So this is the BAB is buy at B, NGM. So I put this post out a couple days ago in the Facebook group. If you scroll down, just to show you that I put it out ahead of time and not pump and dump. This was before I entered the trade, TIGR Tuesday on March 25th. So the next one I think that might have merit for this particular pattern would be NGM. And so the entry for this one would be on the NGM would be that it would have to close above this close right here. So let's just get a reading on that. Now, you won't know until the close, and the spreads are a little wide on this one. I've noticed today. I was watching it earlier. So it'd have to close above 1660, maybe say 1675. So anywhere from about where we are now or higher would be a good entry on that. And unfortunately, it did kind of shoot higher earlier. Usually, I like them to be a little stealthy in here and not take off right away, kind of like that TIGR did. Let me just pull it up real quick for you. You can see it just kind of made this marginal new high in here and didn't alert the whole world that it was rocketing higher. But so far, so good on that one. Obviously, it doesn't always turn out that good. If it did, you'd never see my fat ass again. But anyway, but the Facebook group is for anyone who's also a member of DaveLandry.com. Let me just, I think I shared the wrong thing. Let me just show you real quick, and then I'll wrap it up on that. Oops. It worked pretty good in rehearsal. Here we go. So let me just bring it back. I don't know if that screen was up or not, but the TIGR, what I was saying was, notice I just kind of made this little stealthy closing high right here, and that was the entry on the close. The good thing about entering on the close is a lot of times you have better liquidity in something like these IPOs. And we did take partial profits right around here at 14.55, I believe, and then now we're trailing a stop loosely to hopefully capture a longer term trend. So let me just pull the other chart real quick and then I'll wrap it up, promise. So any close above this closing high, which is the high set for the first week, the closing high would be an entry on that one. So right around where it is, let's say 1675, 1685 or higher would be an entry on that one. For stop, I would use about a 2-point stop, and that would mean that this stock has completely failed, meaning that it's going back towards its old lows, and then you want to get out the way. Maybe a 1.5 stop you can get away with, depends on where it triggers. So 1.5 to 2 points on the stop, and that would also give you your initial profit target, where you would take half profits and then trail the stop loosely. Anyway, for more on that, it's all, the money management is all in the book, which you can get at DaveLandry.com/CFN, and I'll put that link up in 1 second. While I'm doing that, AJ, do you have any final thoughts for us? It could be about anything you want.
Well,
so go right ahead.
Yeah, I can't help but just chime in and just reiterate the importance of position sizing. That's something that Grant brought up, and he does something almost exactly the same as what I do, which is very good. And it's so overlooked. You know, this whole topic of today's CFN was about indicators. And in my experience, you know, the indicator or even the template or system you're using is really only 10% of a successful package. 40% is that position sizing and risk management, and then the other 50% is taming your trading emotions. But what's interesting is that 10% is where everybody, it's like shiny object syndrome. Everybody wants to know about the indicators, and everybody wants to know what tool is going to make them successful. And I've had people come to me who have said, hey, AJ, I've used some of these premium selling strategies or some of your option, you know, around earnings season, some of your implied volatility strategies, and they work so well. Then the market changes on me, and in one trade, I lose a good portion of my portfolio. And I'm thinking to myself, how is that possible if you've got good risk management and you're sizing your positions in advance? You should always know, you know, before you even get into the trade, how much you're going to be risking in the trade, and apply that to, you know, reverse engineer it into what sort of risk you want to take on in your portfolio. And as Grant pointed out, you can then determine your position sizing. You should never risk any more of your overall portfolio such that one trade can knock your portfolio down by a significant amount. In our programs, you know, you'd have to do anywhere from 25 to 100 really failing investments in a row in order to knock yourself down. And we usually say after 3 in a row, especially with the type of trading we're doing, stop what you're doing and go back to your paper trading, because you're doing something wrong. It's not just the market throwing curveballs at you, right? You need to go and reevaluate what your process is. So I just want to leave with the audience how important what Grant was talking about, position sizing, and what you were talking about, which is risk management, is above and beyond any indicator, any system, any tool you're using. You need to know how to learn how to position size and manage your risk. So I wanted to throw that out there. And the other thing is if you're interested in any of this premium selling stuff that I've been talking about that works in sideways, choppy markets, we actually have a pre-recorded webinar presentation that you can easily go visit and check out. It's at optioninvesting.org. I think I could type it into the chat section. I'm going to go ahead and try that right now. https://optioninvesting.org/workshop. And go check that out. And I lay out in detail during this webinar. And let me just click on that link just to make sure it actually works.
Yeah, AJ, I'll have David confirm. I was curious myself. Is that group chat just for us, David, or is that shared with everyone?
Yeah, only we can see that, but I'm
Oh, I
copying
love it.
into the main the chat that the audience can see.
Oh, perfect. Perfect. So optioninvesting.org/workshop. If you're interested in some of these strategies that work in sideways choppy markets, I'm all for you, and I'm taking too much of the time, so I'm going to pass it on. Thanks.
No. You're fine. You're fine, AJ. And I just put I'll put my link up there too, not to put it on top of you, but since I'm up next. Well, let's go to Bennett first. I'm sorry, Bennett. Do you have any final thoughts?
Well, first of all, I just think this has been a great group.
Yeah.
I think
I agree.
we're kind of all on the same, wavelength, so to speak. Risk control and, one other thing, AJ, I said, I thought you said it really well, the whole thing with risk control and everything. But one thing you also said that we really haven't talked about is paper trading. All right. There's so many people out there when you talk about paper trading, they go, poo-poo it. But, if you can't paper trade successfully without having real money on the line, then you're never going to be successful with real money on the line. Now, the benefits of paper trading are just like the benefits you get, pilots get when they do flight simulator work and all that kind of stuff. What they're doing is seeing what science works and what doesn't. In other words, what part of your system is working and what doesn't, and what your win ratio is and what your payoff ratio is. You can get all those numbers. And if you have a successful system, paper trading, hey, then go ahead and you got to paper trade for a long enough period that you see different market cycles. I'm not talking about maybe 3 trades. You need to do a bunch, maybe 50, okay, before you have some type of accurate statistic. But the idea is once you do that, then go in with real money. And if you screw up, probably it's your emotions. It's got to be one or two things. It's either you're seeing a market cycle you didn't test for, or it's your emotions.
Yeah.
Because you're not following your system like you followed it before without the real money on the line. So it would be far better to know that if you go into the markets with real money and fail, if it's your emotions or if it's your system. And that's the benefit of paper trading.
Absolutely.
And, we all know it's not going to be the same as trading with real money. That's a given. Okay. But I really find it amazing how many people say don't bother, because I really disagree with that. I think paper trading is so important because it just hones all your skills, and you can practice your position sizing quickly. You'll get better at that. Your order entry, whatever, your science is in executing the trades, that will definitely improve. So I really thought that was a good thing to bring up, AJ, and we didn't talk about that. And I think that is as important as risk control, because that's what you need to start to do. All right. I don't want to take up too much time either. I'm just going to share my screen real quick because I'm trying to get my Facebook likes up. Okay. So anybody that can help us do that, it's quite challenging. So we're trying to make our Facebook page really fun, and we're trying to also make it something informative. And so from, picking some stock opportunities to anybody else that wants to share some information on it, hey, go for it. But here it is. This is what it looks like. So when you go to this page and you see this, you're on the right one. And then you click on the like or follow. You can do both. Okay. And, we just try to put a lot of informative stuff up there. It has to load. Here's my stock pick for the week. Okay. So you can get that. And I cover all that stuff. So we try to have fun with it. We also have a website too. I'll put that up in the chat area you can go to if you're interested in any of our trading tools and so forth. But that's it. And we just have had I've had a blast being here today, because I really think Dave and AJ, we're all in the same wavelength, and it's just great when that happens.
Yeah, likewise. Yeah, Ben, and I like what you said. I have a saying, because one thing I didn't touch upon was trading psychology, and I'm going to do that just briefly here. But I have a saying that I've never met an unsuccessful paper trader, and I put that in the Layman's Guide to Trading Stocks, which I'm giving away today free. And I think I had some guy come up, it's like, oh, I'm unsuccessful paper trader, so now you can say you met one. I was like, well, how long you been trading? He says 2 weeks. I said, all right, go away.
Yeah.
Give it a while. And like you said, a variety of market conditions. But one thing that I've noticed now, I think that sooner or later I might have to recant on that quote, because now that you have these trading simulators where it keeps you honest, and the successful paper trader, I think they're taking the good signals and maybe not taking the mediocre ones, or maybe they're fudging on the entries or whatever, not intentionally, just because they want to make it work. And I think nowadays with these trading simulators, that you have to be honest with them, and whether they work or not. I do like what you said. Trade whatever system you have over a variety of conditions. I have clients come in, they give up, and then I call it African Queen syndrome. In the movie, they went through all these trials and tribulations, and then they were just almost to the lake where they were going to escape, and they gave up. And if they'd just gone a few feet further, they would have made it. And a lot of times people come in choppy markets, grind it out, give up right before the next big trend comes along. On the flip side, I've seen people do stupid things like tell the boss to F off. I had a couple that were really good. They had a business together, doing really well, and they started trading my stuff and my signals, doing a really great trending market, and they decided to just pitch it all because they just were going to trade after a few months of that. So you've got to go through a few cycles so it doesn't go to your head, or you don't get too bummed out in the process. AJ pointed out money management. I believe firmly in that. Also, keep it simple. Start with a blank chart first before adding any indicators, and then money management again, and then circle back to trading psychology. I think that's really often 90% of the battle. I can give you a simple little system and say, just go out and follow it, but most people won't be able to follow it. Somebody said, if too many people start following you, is that going to be a problem? And it's like, no, because too many people will not start following me. What happens is when conditions are real good, they'll start front running the signals. They'll start staying in a little later. They'll start taking mediocre setups. Just the normal human nature rears its ugly head. And I talk a lot about psychology. I have a complete course on psychology under the members area, so check that out. And then you can go to davelandry.com/CFN for crowd forecast news. Get the books, get into the free area of the members site, and then ideally I'd like to see you upgrade into the real members area, because what I'm trying to do there is create a mastermind group where we can all help each other. I showed you a few picks that I threw out on Facebook that were doing pretty good, but we've had quite a few from members that have done really, really well. And I've actually come in, missed the setup completely until I saw it in the Facebook group. So I'm grateful for that. So I believe we all could help each other in this business, and none of us has all of the answers, obviously. Anyway, I think that's enough pontification. Good show. As Bennett was saying earlier, I had a good time this week. Obviously, learned a little bit in the process, and I think everybody else did too. I love doing these shows, and hopefully Dave will have me back a few more times. I'll be happy to come back if he'll have me. AJ Brown, trading. Well, I'll let Dave wrap up the show, but everybody enjoy your holiday, and then I guess I'll see you guys again soon. Thanks again to David Cosmitter and to Crowd Forecast News and Timing Research for having me back once again. Thank you.
Thank you, Dave.
Yeah, lots of good information on the show. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. And you can also go to TimingResearch.com to get access to the recording of this or any of the past shows or reports. Be sure to join us tomorrow for the 73rd episode of Analyze Your Trade with John Thomas, Larry Gaines, and Brian Clindworth. And just want to thank my guests again for this week. I had Mark Sachs on the schedule, but he'll be back next week. And so if you were watching for him, he'll be back soon. But AJ Brown of TradingTrainer.com, Bennett McDowell of TradersCoach.com, and Dave Landry of DaveLandry.com. Thanks, guys.
Thank you.